Everybody, today is Wednesday, September 11th, and we had quite a turnaround here in the market. Let's start with a look of the four key ETFs, the SPY, Qs, semiconductors, and biotechs. What we saw for the SPY, we'll start there. We got back above that 5-day moving average, and we were flirting with it the last day and a half. That's why it went from red to yellow in there, similar to the last turn where it went from green to red and yellow. And then we see a trend emerge out of there. We got back above the anchor from the high that it made earlier this month, and that's when the buyers were committedly in control. For the NASDAQ, we saw that it made a higher high above that flat to rising 5-day moving average and made it through the anchor from the high. Semiconductors, they were the leaders really early on this morning, and they are performing well. They're a little bit extended near term, and we'll talk about that in a moment about looking for a little pullback before an entry. And the biotechs are looking strong as well. So let's start out with the two time frames here with the daily time frame on the left. And you can see that we undercut the anchor off of that August 5th low a couple times here recently, including this morning. It kind of looked like we were dead for a little bit in there because we got rejected at the anchor from that high at the beginning of the month. We pulled back, made a higher low, and then just rocketed higher. When you look at the let's look at a 5 minute time frame here. You can see it was just up, up, and away. So buyers are clearly back in control. The question is, if you're not involved on the long side, where do you get involved? Well, we can do a couple things. We can put an anchor on today's action because that's certainly going to be of interest. Ideally, what we can do is pull back down towards this level, and then tomorrow, after the pullback, look to be a buyer over in here with a stop maybe somewhere underneath that 5-day moving average. For the NASDAQ, kind of the same story. It did make it up through the anchor off of this recent high. The all-time high right here has that anchor also. Now we have a declining 50-day moving average. That's troublesome. The 20-day moving average is going to be flattening to declining as well. So I don't think it's prudent to chase these markets. I never do. I mean, when a market goes as it did here from 451 and a half to 469, that's a big rally, and that needs to pull back a little bit, is the way I look at it. Ideally, it does something like this in the next few days, but perhaps it continues to move higher. The question is, what do the odds favor? Not what's possible, but what do the odds favor? After a move of this magnitude, certainly we caught some shorts off guard, and that's what this was a fear driven, from the shorts as well as some FOMO longs. The better opportunity would be hopefully we get a pullback first. We have that declining 50-day moving average right here, which tells me maybe we continue up a little bit and then pull back in the next day or two. The Russell 2000 is just broken. It's terrible. It's a waste of time. It's got this pattern still of higher highs and lower highs and lower lows. We did make a higher high, but we don't have a higher low to go with it. So if it can pull back and then do this, well, then it can start to stabilize right here on the year-to-date anchor, which is above the 200. So that tells me that, I'm not a dip buyer, but it tells me that it's likely an area of support in here. In this general area, but I wouldn't buy it yet. Semiconductors, as we mentioned, they were the leaders early on. They gapped up and then pulled back, and NVIDIA was a stock on our list for today. For the semiconductors, we gapped up, hit daily R2, pulled back, consolidated a little bit, got back above the VWAP, and then it was off to the races there. If you don't buy there, you can buy here, you can buy here, you can buy here. And the idea is buying at those circles to put your stop underneath the most recent relevant higher low. That is the low that precedes them is the way to do it. Or if you purchased here, stop below the low of the day. As it rallies up a little bit, raise it to here. After that shakeout and then recovery, then raise it to that point, etc. throughout the day. So the daily time frame, we've got a little bit of room to run, I think, still here, and it seems likely that we'll probably continue up into this zone. Now, the way I would look at it is tomorrow morning, if let's clear this up, tomorrow morning, if we were to get some kind of pullback down towards today's VWAP, I wouldn't buy it there, but I would, if it then got back above the daily VWAP, straight out strategy out of my book, Maximum Trading Gains with Anchored VWAP. If you don't own it, you should just stop listening to me, truthfully. But anyways, the point would be to buy there with a stop below the low of the day. for continuation up to there. And the idea isn't to put an investment on, but this is for a trade. And you've got to wait for a pullback. Don't buy the pullback, because what if it keeps doing this instead? It doesn't seem likely, but what if? We always have to be prepared for what's possible. The biotechs, I think these guys are probably the best setup there is in terms of maybe you're not going to make the most money immediately, but when you look at the weekly time frame, and as we've pointed out previously, the anchor off of this all-time, not the all-time high, but the high from 2021, we're holding above. What had been a cup and handle has now turned into an ascending triangle. It doesn't matter what you call it, as long as you recognize we have higher lows, and that means the buyers are getting more aggressive, not waiting for pullbacks to 91, but instead taking control at 95. And the time between the tests of that resistance is diminishing as well. So buyers are getting more aggressive price wise and time wise. We got back above that 5-day moving average today. Ideally, I got long here today, but ideally from a new entry standpoint, it does this in the morning, catches a bit at the 5-day moving average, gets back above the daily VWAP, and then it's off to the races. Worst case stop, I think, goes below here. If you really wanted to give it a lot of room, then probably under there. To me, that's foolish to wait that long. If it breaks this, all the momentum's gone. There's no reason to continue to hold it the way I look. I've been saying for a while, bonds, I've just been saying you need to own them. I don't see a low risk entry here, but the buy was previously. Energy has been saying garbage, stay away, downtrend, forget about it. And then I guess we should talk about the financials. They got rejected right at the declining 5-day moving average yesterday. They're still in profit taking mode. Nice to see that they caught a bid near the 50-day moving average and the anchor off of that low. But we have a pattern here of lower highs and lower lows, so it's not time to purchase yet.